Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Now want to get to what was a red sticky here at Bloomberg about 2 hours ago. This is when a big headline crosses the Bloomberg terminal.
And that's that Amazon has submitted an offer to purchase TikTok. The company submitted a bid to the White House to purchase the app from its Chinese owner. This, according to a person familiar with the matter. The company did send its proposal to Vice President J.D. Vance. He's heading up efforts to help facilitate a sale of the video platform. And Commerce Secretary Howard Lutnick, too. This, according to the People. So, with what we know and why Amazon might want TikTok, with us is Bloomberg News technology and e-commerce reporter Spencer Soper. He follows Amazon very closely, been reporting on this company for years. He joins us, of course, from our Seattle bureau. Spencer, why would Amazon want TikTok? What would it do with TikTok?
So if you think about it in the simplest terms, right? People spend a lot of time on TikTok and people spend a lot of money on Amazon, and both of them have been trying to kind of become more of the other. So if Amazon were to were to buy TikTok, it would be very beneficial just in terms of having people's attention, where, right now they've got a lot of wallet share, but it's really a site where people dip in, buy what they need, dip out. Which has been very good for Amazon, but if it could get people to linger around and be entertained there, all the better. People spend even more, and its advertising business will be that much more lucrative.
I think about kind of the merge of commerce, right, with TikTok. To me, it makes a lot of sense. Is that a big part of it, Spencer?
Yeah, exactly. You think about, like, Amazon is a place you go when you're ready to buy something, right? You don't really go there to kill time. You don't really go there to be inspired or discover things. But those are things that you do on TikTok. You might just kind of scroll through TikTok to kill time or follow people you think are funny or entertaining. But you also see products on there, and so TikTok is really trying to be a destination for discovering products, which Amazon never really has been. So that would be kind of the match that Amazon would be looking for.
Not to say, though, that the company hasn't tried to make it a place to discover with the social first videos and the option in the app to sort of have that content that's generated to try to create this social shopping experience. It's certainly not something that I spend a lot of time doing, but Amazon is certainly trying to do that. Hey, Spencer, before we let you go, regulatory issues around this potentially, especially with regard to the past contentious relationship that Bezos had with this administration?
Yeah, well, that's what you think about, that they're under antitrust scrutiny, and there was antitrust scrutiny about them buying like iRobot, so this would be like a massive acquisition. And is there like a new age in the Trump administration that would be more favorable to these kind of big deals? And especially since the administration is directly involved in making this happen, with J.D. Vance kind of running the show and running these bids, that makes it more possible for Amazon to swing big on acquisitions.
One thing I wonder, the bid first reported by the New York Times, you guys too here at Bloomberg reporting this out, that it's not being considered seriously by the administration, according to one person in the know. The company has declined to comment. How serious Amazon, I'm calling you Amazon because you're Amazon, Spencer. How serious, Spencer, should investors be taking this?
Yeah, that's the $1 million question. And there's a lot of 11th hour bids coming in. Like, after the news broke about Amazon, now there's a couple others who have been reported, like AppLovin, and maybe some consortium that includes like OnlyFans. So there's been a lot of 11th hour bids, and there can be reasons for companies to do that, even if they think they're a long shot. One, it might just give them kind of a seat at the table to figure out what's happening and how this thing might be carved up in case they end up, competing with TikTok. And then another reason is just to try to up the price in the event, hey, if I'm not going to get this thing, maybe at least make the person who does pay a little more.
That's what I was thinking, especially if Oracle is a serious bidder here, Spencer. maybe this company, Amazon, just wants to say, hey, we want, or if Oracle is going to bid for this and we're a competitor to Oracle, we want them to pay more than they're going to pay.
Yeah, that's definitely part of the play, as well as some visibility into what's happening, because this is still a very complicated process. You need approval, not only a blessing from the White House, but you're going to need ByteDance to buy in and the Chinese government to buy in. So there's a lot of players here, and some, I imagine anyone, even if they think they're a long shot, they just be curious about what the heck's going on, and putting in a bid might give them more visibility than sitting it out.
But we should know something at least by Friday, right? April 5th, because that's the deadline. Is that right? 3rd, 4th, 5th? Actually, Saturday, I think it is, right? So
sometimes you just got to have the calendar open and out.
That's the second deadline.
Correct.
So who knows if we'll have another deadline? You know what I mean? It's like these deadlines can come and go, but yeah, that's the date for now. And supposedly there might be some news coming today about it.
Yeah, we understand that the president's meeting with his advisors about it, right? Thank you. So appreciate it. Spencer Soper, as Tim mentioned, been following Amazon for so many years, understands this company. He's Bloomberg News technology and e-commerce reporter, joining us out there in Seattle.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Okay, so everything we've done for the last couple of weeks has certainly been through the lens on the backdrop of U.S. tariffs. It's something that touches all of the investment in business worlds, including potentially the AI investment world. And today at Bloomberg headquarters, our Bloomberg intelligence team is hosting Bloomberg's 4th Generative AI conference. And it's an event that looks at Gen AI post the DeepSeek news earlier this year. And Carol, as a reminder for all of us, that really shook up the narrative around the AI build-out.
Absolutely. We are featuring a couple of speakers from the event, and that includes our next guest. Delighted to have with us Dave Brown, Vice President, AWS Computing and Networking at Amazon Web Services, joining us here in studio. Dave, good to have you here.
It's great to be here. Thank you for having me.
There's so much going on.
There is.
I do need to ask you, we know this isn't your world. Nothing happens in a bubble. You were just listening to Spencer. I thought I saw you chuckle at one point. The report about Amazon putting in a last-minute bid, I think about AI. It is about content. It is about data. And I just wonder, how might a social media site like TikTok make sense in an AI world, whether it's at Amazon or somewhere else?
Well, in terms of Amazon's bid, that's not something I'm able to comment about, obviously.
No memos from corporate about this?
Nothing at all. I walked into the studio and I saw the news. So, but ByteDance has been a really good customer of AWS, and honestly, a customer that's actually used a lot of compute and is now using a lot of AI. And one of the things we're excited about what they've been doing, and unrelated to any of the news that you might be reporting, is they've used a lot of the custom accelerators that we've built at AWS. One of the challenges with AI is how do we get the cost down? How do we make sure that it is affordable for every company out there that thinks they could use it in some way that would change their product? But really, we have to be able to get the cost down. And one of the ways we can do that is through things like you saw with DeepSeek, improving the models, making the models simpler, making them easier to train. But the other way is to build different silicon, build silicon that's able to get the cost down for customers. And so ByteDance has been a big user of our custom silicon in the very early days of Inferentia, which improved inference models. They've also consumed Graviton, which is our custom ARM chip. And they're also using our Trainium chips as well. So we work very closely with ByteDance from that point of view.
How do you make sure that you keep a company such as ByteDance as a customer when there is so much competition in this space? I mean, think about it from the perspective of the 3 biggest players. You, of course, Microsoft Azure, and then Google Cloud. And we've seen a big investment. We'll talk about that for Google just in the last couple of weeks. How do you make sure that you stay ahead, in your view, of the pack and keep these customers from jumping ship?
I think there are a few things. I think one of it is innovation. The cloud has just brought an enormous amount of innovation into the corporate world.
But some people might look at this and say, is this a commodity at this point?
I don't think so, because my next point would be execution. And execution really, really matters. It's one thing to say we have the hardware.
What does that mean? I feel like,
absolutely.
Like executives throw out execution all the time. What does it mean in your world?
Well, what it does mean is, running AI, for example. So the servers behind AI, whether you're running an NVIDIA GPU or you're running some custom silicon, such as our Trainium chip, they're not easy machines to run. They're incredibly complicated. They're incredibly hard to make sure that they're highly available. They also need incredibly advanced networking capabilities. So we've had to build network capabilities to be able to bring hundreds of thousands of these accelerators together in a single cluster. Now, at AWS, we spend a lot of time making sure that we provide those clusters and those systems to be as highly available as possible for our end customer. And so when you choose your technology, if you're running on a solution, whether it's something you built yourself or a provider, and that's not working for you, that's what I mean by execution. It has to be flawless and it has to work. And at AWS, we think that's one of the ways we're able to differentiate ourselves.
Are you at all worried about overbuilding? Like obviously with DeepSeek, the narrative all of a sudden, like in a heartbeat, switched in terms of, well, maybe we can do this more cheaply. Maybe it doesn't require the build out that we've been talking about for more than 2 years.
Yeah.
Are you worried about overbuilding? Are we possibly in a bubble when it comes to
I think from
AI
our
build?
certainly. Well, from our point of view, we're not really listening to sort of the narrative. I think the narrative is very interesting. We've been following it. What we're listening to is customers. And what do customers want to do with AI? There's certainly no shortage of customer demand for the chips, right? Whether it's NVIDIA chips or our own custom silicon. You've seen partnerships.
No doubt about that.
Folks,
demand. And the demand is smart because it's being put to use and it's going to be monetized.
Yeah.
No worry.
Well, I mean, the other thing is you have to make good investments. And so the trick is to say, what are we building in terms of customer demand? What are we building in terms of the narrative? And I think from a customer demand point of view, it's very, very strong. We expect it to continue to grow. And we're very comfortable with the investments that we're making.
So it brings us back to the way that we started this conversation. We're speaking to you on Wednesday, April 2nd, ahead of President Trump's announcement that's set to come at 4 p.m. Wall Street time from Washington, D.C. So we don't know what he's going to say at this point. How do you watch an event such as that? How do you watch tariffs? How does that affect your world?
Yeah, I think one of the things when you're running what is probably one of the largest supply chains in the world, right? We have to think about every single component, whether it costs a few cents or it's millions of dollars within our supply chain.
You're talking about the AWS side,
the AWS,
not the retail side.
Not the retail side,
which is certainly effective.
The retail side is certainly helpful to us, and it's taught us a lot about how to run an effective supply chain.
Right.
And so on the AWS side, running a supply chain, we've got to think about every single possible outcome. The sort of things that you're talking about now with regards to tariffs or global uncertainty, whatever it might be, we're going to think about how that would affect our supply chain. And we've put mitigating steps in place, and we're thinking about these as we build to make sure that any outcome means that we can still serve our customers.
What are some of those mitigating steps that you've put in place?
There's lots of things you can do from a supply chain point of view. A lot of the silicon we manufacture ourselves. We always think about multiple suppliers.
Like, are you stockpiling this stuff right now?
I don't believe we're stockpiling, but there's many, many things that we're doing to ensure that we're going to be okay. Such as making sure that we have multiple locations for servers, such as making sure that we have a cost structure that we think is maintainable for our end customer. It's supply chain technology, basically.
Is most of your supply chain safe in terms of, let's say it's an all-out trade war?
The reality is, I think, in the IT space that we're dependent on a global supply chain, not just AWS, but the world. Mm-hmm. But our chips are made, most of them are manufactured in the Far East. Most of the technology and cloud comes from the US. And the reality is we're living in a global supply chain, and we're going to have to take whatever the announcement might be later today and understand how that affects the supply chain that we've built out to be as redundant as it possibly can be, but we're going to have to see what happens.
Is there a spectrum in terms of the cost hit that you think you could take as a result of these tariffs?
That's not something that I think we've been discussing. I think there will be things we'll have to think through, but I don't have any sort of spectrum in mind.
What about thinking about raising prices for customers as a result of higher input costs?
That's something. I think a similar situation would be sort of the energy prices increases that we saw, during the COVID time. There was energy shortage and slightly after COVID in Europe, and that was a big question back then. Is AWS going to raise prices because we've seen energy prices spike in Europe? Other providers did raise prices at that time. And from an AWS point of view, we were able to actually not raise prices on our customers and ride out that increase in commodity prices. And we were able to get back to a better cost structure for ourselves after this. And that's really what we're looking to do. We'll have to see what happens later today and see how our supply chain holds up.
I am also curious about DeepSeek in terms of, what might be a more efficient AI model, how that is affecting the design of your own chips at AWS and kind of how you think about how AWS offers compute services and so on.
Yeah, DeepSeek itself, it was good technology. It came out. I think it surprised a lot of folks. We're expecting to see these kinds of significant improvements, step function improvements.
You weren't shocked by DeepSeek?
Well, certainly the news. It wasn't something that everybody knew about. But what I wasn't just shocked about is that we're going to see these order of magnitude improvements in models. I'm expecting more. Like, the technology is so new still, and we are going to see massive improvements. And I think the one thing is when you do see a cost reduction in these models, what it does do is it unlocks companies to be able to deploy more. And so while it's cheaper to do, it just means that you can do more of it. And that's one of the reasons why we're not worried about some of the investments we've made, because we can see the demand. We know if the price goes down, our customers are going to do more. They're going to change the user experience for more of their customers. And so, that's what really excites us about the opportunity.
Really cool stuff. Great to talk with someone like yourself who's kind of front row seat to all that's going on in AI. Dave, thank you so much.
Great. Thank you for your time.
Dave Brown, he's Vice President of AWS Computing and Networking at Amazon Web Services.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, now let's get to some of the news that certainly has caught our attention. This has to do with New York City Mayor Eric Adams, and that is that a federal judge dismissed corruption charges against Eric Adams, bringing a permanent end to the case and capping an extraordinary series of events that sowed discord within the Justice Department.
With more on the judge's ruling, we turn to Bloomberg's legal reporter, Ava Benny Morrison, who joins us from New York. What exactly was this ruling? Is that it? Everything thrown out?
It certainly looks like it. The judge really took his time considering all the arguments that have been playing out in the courthouse over the past few months. And he reached the decision today that everyone had been anticipating, that he was going to dismiss the case against Eric Adams without prejudice. Now, that last bit is important because that means this case can't be revived down the track. You may remember that the Justice Department in Washington had wanted to dismiss the case with prejudice, which would have given it the option to bring back the case against Adams if they felt the need to. And this led to concerns that Washington wanted to maintain leverage over New York's mayor, which didn't seem to sit well with the judge.
It's interesting, too, because right in that ruling, the judge criticized the effort by President Trump's Justice Department to leave the refiling option open. What is that?
Yes, he referred to this situation as unprecedented, and it was certainly something that I haven't reported on before. The judge said that it was very clear that everything here smacks of a bargain, dismissal of the indictment in exchange for immigration policy concessions. But he warned that dismissing the case without prejudice would create that unavoidable perception that the mayor's freedoms depended on his ability to carry out the president's wishes. So that's why he decided to dismiss the case without prejudice.
So basically, the mayor can do whatever he wants, right? In terms of even whatever he agreed to maybe with President Trump, because he doesn't have to worry about a refiling.
That's right. He doesn't have this case hanging over his head anymore. So some may argue that he doesn't have the pressure of having to do what Washington wants him to do. But we saw him today outside Gracie Mansion, and he was holding up a copy of FBI Director Kash Patel's book, Government Gangsters, which is very critical of law enforcement. So we've had little indications from him over the past few months of him kind of edging closer to the current administration. Whether he decides to continue that stance, we don't know.
Is that the book is that the book with the list in it of people?
I'm not sure. I know that in the book, he's been quite critical of law enforcement and the way they go about things. And Adams made the comment that he had to turn to that book to find the rationale for the DOJ bringing the case against him.
20 seconds. All of his legal problems. We know he has political challenges. Are his legal problems over? 20 seconds?
It certainly looks like it for the time being. He may have avoided a criminal trial, but he's still facing an uphill battle when it comes to politics. He's facing several candidates who want to unseat him, and a string of polls have put him losing the primary election in June.
Yeah, court of public opinion can be pretty rough, especially when you're New York voters or New York City voters. Ava, thank you so much. And I say that with admiration. Ava, thank you so much. Ava Benny Morrison, legal reporter at Bloomberg, joining us.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. You just got an update.
Did you say TikTok?
TikTok.
Is that because it's like, is it because the Amazon thing? Is it the Financial Times report? Why are you TikToking right now?
Yeah, maybe.
Or you're just like, tick-tock,
tick tock,
Okay,
tick tock,
that's
tick tock to the close, and tick tock until we get from the president, right? What he's going to lay out in terms of tariffs. It is expected at 4 p.m. Wall Street time, so we are just about 18 minutes away from that, as expected, if everything goes on schedule, and also just about 18 minutes away from the closing bell. As you heard from Bill Maloney and Charlie Pellet, we are up about 0.6% on the S&P 500. Folks, we're definitely off our lows of the session and off our highs, but a little bit of a leg up in the last half hour or so. Dow Jones Industrial Average, if you care, up 230 points, up about 0.5%. NASDAQ 100, where you find all those big cap tech names, up about 0.8%. Tim, a gain of about 151 points.
I'm curious how Noah Haman is watching this. He's founder and CEO of Advisor Shares. Noah, you argue that we got to look at Trump's first term to understand equity market implications, but as our own Enda Curran reminded us a little earlier in the hour, this could be way, way bigger. In fact, these measures could mark the biggest protectionist move in 90 years. Are there still lessons from the first term?
I think so. The first big lesson is to remember he threatened a lot of tariffs and then pulled back on Mexico and Canada. China's tariffs at the time on, I think, aluminum and steel continue to remain in place. So any minute, any hour, people can change their mind. I think I was just seeing something pop up about even Canada suggesting they would remove their tariffs in return for us removing all of our tariffs. So I think the thing to remember is anything can change in a minute. And when we look back at what happened back then, you had a volatile market, but overall the market continued to climb. The challenges it saw at that time were far more about Fed tightening, I think, than anything else.
So are you on hold, though? Do you want the details before you figure out kind of what to do next?
I think so, or depends on what kind of investor you are, right? If you're a long-term investor based at least on history, which may not repeat, of course, but I might continue to do what I'm doing, right? My monthly 401k deposit, I'll allocate it to the market. I'll sort of buy this dip that we've seen going on in the U.S. markets. I might start to look a little bit more at international markets, not as much about tariffs, but they've been strong this year. That's been one of the bright spots is, EFA's up, I think, almost 6 or 7%. So is ACWI ex-US. So if you're a long-term investor, I think I'd just probably not worry about it too much. Expect volatility. If you're a trader, you might be, thriving on increased volatility.
No, there are some folks out there who are concerned about the fundamentals of the U.S. economy. And I'm talking like structural here. Like something could shift substantially, unlike what we've seen really in our lifetimes. I've talked to friends who are not involved in the markets on a day-to-day basis who said, I'm getting out of the U.S., I'm going to cash, or other friends who say I'm going overseas now with my money. Again, these are not what I would call sophisticated investors or traders. They're just really thinking differently about asset allocation. What would you say to them?
So I would say the idea of moving international, just again, given what we've seen happen earlier this year, and it just feels like it's time for international markets. They've been underperforming for so long. That's probably not a bad idea, but the market's 5 or 6 or 7% off of all-time highs. And if you're selling your portfolio, going to cash, don't forget that tax bill that's coming as a result of that. So, if that makes you feel comfortable, I think that's fine. There's nothing wrong with that. Again, consider those tax implications. But if you think it's going to be a lot worse, then you don't mind paying the taxes on it. But I think otherwise, I'd be a little cautious. It feels like the news changes every minute, every hour, and I would not probably make big abrupt changes until I had better clarity.
What's interesting is, Noah, I think we're all waiting to see if the negative sentiment that we've been talking about so much, we've talked about CapEx by businesses pulling back, consumer sentiment. We've already seen the airlines talk about cutbacks. But again, they've been talking about the current quarter and not necessarily for the rest of the year. Sentiment becomes a problem when it, though, does turn into actions and people stop spending, companies stop spending, companies stop hiring. How much do you think that sentiment will turn into negative action and be with us for the rest of the year? Or are you more upbeat about the rest of 2025 or the second half of 2025?
In general, I'm more upbeat, but you're picking your spots, right? I think ADP just came out with some surprisingly high numbers, right? I think it was 155,000 private sector jobs. There's been plenty of announcements of international companies making capital investments in the U.S. for big plants and manufacturing, right? In part of this tariff drama.
Plans, right? Commitments, plans, but it doesn't mean they'll be a reality.
Right. Excellent point. But I think if it's not a reality, then, things can probably go both ways, right? Maybe things won't be quite as bad here, but you do see it in pockets. When you mention things like airlines, I think, it wouldn't be surprising to see much more business travel cutting back with a little bit of uncertainty. We've already seen, reports, especially along the Canadian border, where they're not too happy with us as of lately, and they're cutting back, travel plans where they come here and they spend and they go to amusement parks or they stay at nice hotels. And so you see things like that cutting back. But if some of those plans turn into real jobs, it could create a production growth opportunity within the U.S. that will still be several years out, but could really create long-term opportunity. But boy, is it going to be noisy and volatile along the way.
Yeah, and look, I think certainly the cutting back that we're seeing from international tourists to the north makes sense. Something Carol and I have talked a lot about, especially in the context of some of the airline downgrades that we saw this week from Jeffries, and the pullback that airlines have talked about is a cutback that American consumers are feeling in discretionary spending. Are you seeing that pop up at all?
A little bit. You've seen weakness in that hotel sector. You've seen weakness, as you mentioned just a second ago, in airlines. I think, there's vices, right? And when I think about things like Corona beer and the impact, and maybe people are going to spend less if the price of that beer is going to go up, well, they can still, buy some Sam Adams that's made in the U.S. and those prices won't go up, or at least they won't go up to the extent that they're not affected by the supply component, right? The metal that's made in their cans to distribute their product. So, yes, you've seen some consumer spending pull back, certainly pulled back with the market, but same thing. It feels short term, it feels temporary, but always subject to change.
So, in terms of dip buying, have you been doing that on the pullback?
I have, yeah, absolutely. So right now, I really haven't changed my asset allocation that much, except for what I mentioned earlier, which is I'm leaning into the international markets a little bit more. I'm also looking at where maybe we might see interest rates maybe going down, which could provide a spark and some ignite, some opportunities in the U.S. The best spots, it seems like this year, has been energy and financials probably. But for the most part, I'm continuing to dip buy, not going to worry about it too much. And I think, as you guys were saying earlier, I need to see what really happens before I take too strong of an action.
All right, going to leave it on that note. Noah, thanks. Noah Hammond, founder and CEO of Advisor Shares, joining us on this Wednesday. Folks, we've just got about 10 minutes to go. Taking a look at the trade. Definitely off our worst levels of the session. Green across the screen. S&P up about 40 points. NASDAQ 100, a gain of 162. Stick around. We're counting you down to the close on this Wednesday.
This is the Bloomberg Business Week podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.